Get ready for the biggest space news of the year. We start with a major shakeup in the investment world as the Rocket Lab's CFO Adam Spice reveals what an upcoming SpaceX IPO could mean for the entire space sector. He predicts a divide between the true operators and the rest of the market, suggesting that quality and proven execution are about to become the ultimate currency in the space economy. This potential listing could completely redefine how Wall Street values everything from launch services to spacecraft manufacturing, and you need to know how it will affect your portfolio.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we dive deep into the ambitious plans brewing between Google and SpaceX as they reportedly negotiate a massive launch deal to place vital data centers into orbit. This isn't just about rockets. It's about building the infrastructure for the next generation of artificial intelligence. We look at how Google's Project Suncatcher and SpaceX's Orbital ambitions are converging, setting the stage for a fundamental shift in how AI scales its computing power across the globe. But the technological race doesn't stop there. We are looking at a monumental move by SpaceX and Tesla as they announce plans to build a massive $55 billion semiconductor foundry in Texas called Terafab. This facility is a direct response to the challenges posed by AI in the supply chain, signaling Elon Musk's intense focus on bringing domestic semiconductor manufacturing back to the U.S. Discover how this partnership could usher in a new era of self-built, adaptive technology. Finally, we connect the dots on this massive infrastructure push. We explore the growing synergy between Google, SpaceX, and other players as they vie to establish space-based data centers. This competition is fueling the momentum behind SpaceX's IPO plans, especially as Anthropic has already committed to using SpaceX's Colossus facility. Don't miss out on this unfolding technological revolution. Stay with us for the full story. The potential initial public offering of SpaceX is poised to fundamentally reshape the valuation landscape for publicly traded space companies, according to Rocket Lab's CFO. Speaking directly with retail investors after the company's first quarter earnings, the CFO, Adam Spice, suggested that the SpaceX listing could create a clear demarcation between high-quality operators and less substantive names in the space sector. Spice indicated that while SpaceX, led by Elon Musk, is reportedly planning a mid-2026 IPO valued near $1.5 trillion, this move will not uniformly benefit all space-related stocks. Instead, he predicts the market will bifurcate into haves and have-nots, rewarding companies that demonstrate real space infrastructure, recurring contracts, manufacturing depth, and credible growth trajectories. This dynamic could particularly benefit Rocket Lab, which has established itself as a publicly traded end-to-end space company encompassing launch services, spacecraft manufacturing, and space systems. Rocket Lab operates in a market historically characterized by broad investor enthusiasm for small-cap space names, often irrespective of balance sheet quality or operational scale. Spice noted that the current lack of investor discrimination across the space sector may not persist following a SpaceX listing. A public benchmark set by SpaceX could force Wall Street to apply stricter scrutiny. Companies possessing meaningful revenue, proven execution, and defensible technology are expected to regain significant investor attention, while weaker names, particularly those reliant on promotional narratives or distant commercialization timelines, may face increased pressure. In essence, while a SpaceX IPO might broaden overall sector interest, it is expected to raise the bar for entry. The CFO's assessment suggests that the rising tide may not lift every rocket, signaling a shift toward valuing demonstrable operational capability over mere association with the space industry. Google and SpaceX are reportedly in advanced talks to establish orbital data centers, a move poised to bypass terrestrial power grid limitations as SpaceX prepares for a major public offering. This speculative technology is central to the growing strategy of space-based computing, which is becoming a key component of SpaceX's pitch to investors ahead of its confidential public listing, targeted between $1.75 trillion and $2 trillion. Google is actively involved in the space race, planning to launch prototype satellites under its Project Suncatcher initiative by 2027, and already collaborating with Planet Labs, PBC on satellite development, holding a 6.1% stake in SpaceX. Google CEO Sundar Pichai has indicated that small racks of machines in satellites could become a standard method for building data centers within the next decade. SpaceX's ambition is further underscored by recent strategic moves, including a merger with Musk's xAI, valuing the combined entity at $1.25 trillion, and an option to acquire the AI coding startup Cursor for $60 billion. The company has also secured a significant deal to supply terrestrial computing power to AI firm Anthropic using 220,000 NVIDIA GPUs, with Anthropic already showing interest in SpaceX's future orbital data centers. The potential for successful orbital testing suggests a fundamental shift in how major tech companies scale artificial intelligence infrastructure. Market sentiment reflects this optimism, with a Polymarket contract showing a 71% probability that SpaceX will achieve a $2 trillion valuation and a 70% chance of an IPO occurring by the end of June. Given Google's involvement, the concept of orbital data centers is increasingly viewed not as theoretical, but as an imminent piece of critical infrastructure. SpaceX and Tesla have announced a significant joint venture to establish a $55 billion semiconductor foundry in Texas, marking a major strategic move to secure future fabrication needs. This ambitious project, named Terafab, will be developed in partnership with Tesla and is slated for construction in Grimes County, Texas. The announcement signals a deep commitment to domestic semiconductor manufacturing capacity, aligning with Elon Musk's stated goal of bringing semiconductor fabrication back to the United States. The impetus for this move stems from escalating challenges in the global semiconductor supply chain. While the COVID-19 pandemic exposed existing vulnerabilities, the rapid growth of artificial intelligence has introduced exponentially greater demand, leading to businesses purchasing nearly all available manufacturing capabilities. This surge has resulted in increased hardware costs for consumers across components like RAM, CPUs, and PCBs. Recognizing these systemic risks, both SpaceX and Tesla are exploring the creation of in-house semiconductor capabilities. The Terafab facility is positioned not only to produce semiconductors for U.S. use, but potentially to develop next-generation computing systems, reflecting Musk's broader vision for advanced technology. This initiative comes at a critical juncture for the U.S. semiconductor industry, which has faced significant dependency issues, with domestic wafer fabrication capacity plummeting from 37% of global production in 1990 to under 10% in 2024, with manufacturing heavily concentrated in East Asia. Industry analysts suggest that the success of such ventures could usher in a new era of self-built semiconductors. As equipment costs continue to decline and older manufacturing nodes become more viable, companies with their own fabrication units can secure supply chains. This approach may allow for more adaptive technology, potentially favoring specialized, customer-tied facilities that can utilize less cutting-edge nodes, thereby reducing infrastructure complexity. Furthermore, this could foster a communalism model, where multiple smaller companies pool resources to access the latest technology. While the project is highly ambitious and Musk is determined to reshape the landscape, the ultimate success remains to be seen. This development is poised to redefine the future of semiconductor production and national technological autonomy. Google and SpaceX are reportedly exploring a strategic partnership to establish space-based data centers, signaling a new frontier in the race for orbital computing power. According to the Wall Street Journal, sources familiar with the discussions indicate that Alphabet is in talks with Elon Musk's SpaceX regarding a rocket launch agreement, as it investigates the feasibility of placing data centers in orbit. the exploration extends beyond a direct deal with SpaceX. Reports also suggest Google is engaging in discussions with other rocket launch companies. This potential collaboration comes at a significant juncture for both tech giants. A partnership between Google and SpaceX marks the second time Elon Musk has brokered a deal with a major AI competitor he has previously criticized. This development occurs ahead of a highly anticipated and crucial initial public offering for SpaceX. The convergence of these two companies highlights a growing competition to establish dominance in AI infrastructure in space. This ambition is driven by the high capital and technological demands of developing space-based orbital data centers, which is a key factor underpinning SpaceX's IPO plans. The push for this infrastructure is already materializing. Last week, Anthropic announced its intent to utilize the full computing capacity of SpaceX's Colossus One facility in Memphis and expressed interest in collaborating with the rocket company to develop multiple gigawatts of space-based orbital data centers. Meanwhile, Google is actively pursuing its own vision through Project Suncatcher. This research initiative focuses on networking solar-powered satellites equipped with Google's tensor processing units to create an orbital AI cloud. Google is targeting an initial prototype launch with partner Planet Labs around 2027.